For decades, the relationship between Bangladesh and the Gulf was defined by a single word: remittances. Millions of workers sent billions of dollars home, acting as the silent engine of the Bangladeshi economy. But as we enter 2026, a seismic shift is underway. From the boardrooms of Riyadh to the sovereign funds of Abu Dhabi, Dhaka is executing a high-stakes strategic pivot. It's moving beyond the export of muscle and toward the import of massive capital, energy security, and sovereign investment. Today, we dissect the new power dynamic. Why is the Middle East suddenly betting big on Bangladesh? Channel CB. Historically, Bangladesh was a labor surplus partner. Today, under the Bangladesh First policy, the script has been flipped. Faced with a volatile global energy market and a need to upgrade its industrial base, Dhaka is renegotiating its seat at the table with Saudi Arabia and the UAE. This isn't just about friendship, it's about survival and sophistication. With the transition to the smart Bangladesh vision, the demand for stable energy and high-tech infrastructure has turned the Gulf states from mere employers into essential strategic anchors. What does this recalibrated alliance actually look like? 1. The energy lifeline. Bangladesh has moved to secure long-term LNG and petroleum deals with Qatar and Saudi Arabia to shield itself from spot market volatility. As of early 2026, the Saudi energy giant ACWA Power is moving forward with a $1.5 billion investment in Bangladesh's renewable sector. 2. The SEPA factor. Negotiations for a comprehensive economic partnership agreement with the UAE are in the fast lane. This isn't just a trade deal, it's a blueprint for the UAE to use Bangladesh as a manufacturing hub for the wider South Asian market. 3. The sovereign wealth entry. For the first time, we are seeing the Public Investment Fund of Saudi Arabia looking at Bangladeshi infrastructure, ports, refineries, and special economic zones as A-grade investment opportunities. Why is the Gulf interested? It's a two-way street. Riyadh and Abu Dhabi are undergoing their own Vision 2030 style transformations. They need to diversify their investments away from Western markets. By deepening ties with a rising South Asian power like Bangladesh, the Gulf states gain a reliable partner in the Indian Ocean, balancing their interests between India and China. Paradoxically, as the world moves toward green energy, the Gulf is investing in Bangladesh's transition. They aren't just selling oil, they are building the solar farms and hydrogen plants that will power Bangladesh's tomorrow. The impact of this shift is profound. For the economy, a shift from volatile remittances to stable FDI, foreign direct investment, provides the central bank with much-needed breathing room. For the workforce, Dhaka is pushing for skilled labor exports, sending engineers, IT specialists, and healthcare workers instead of just construction labor. The risk, the ongoing regional tensions in the Middle East, remain the sword of Damocles. Any disruption in the Strait of Hormuz could send Bangladesh's energy costs skyrocketing, despite these new alliances. Our relationship with the Middle East is maturing. We are moving from a manpower-first approach to an investment-first strategy. The goal is to integrate Bangladesh into the global value chains of our Gulf partners. Bangladesh is no longer a passive observer of Middle Eastern geopolitics. By leveraging its position as a growing industrial hub, it has forced a recalibration of its oldest alliances. The relationship is becoming horizontal, a partnership of equals based on energy, equity, and mutual economic destiny.
Subscribe now for daily news and updates.